Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. Hit that like, hit that subscribe, hit that notification bell, and come join us here at Stock Up with Larry Jones. It's a nightmare here. I feel like a mad scientist as we were trying to feed the money moves. Money moves, the top link below. But let's talk about this Fed meeting and what it did and didn't. His statement. First of all, he decided to hold rates where they are. We expected that. We didn't expect anything less than that, though anything is possible. But that's what the market priced in. And just like I expected, the market really didn't move much on that. But when he started to talk, there was some movement. And I'm going to share with you guys some of the movement actually when he was talking, but it was so stable. Usually when the Fed has a short intro into the gotcha questions, when his opening statement is short, that generally signals that he's going to be dovish and not hawkish. For those of you that are new, dovish means that he's not going to be aggressive like a dove. Hawkish is when he's aggressive. Dismissing member felt it was time to cut rates. So there's a couple of Fed members that are on the board, more than one. I know a couple of them were just saying, hey, it's time to cut rates, and they disagree with Fed Powell. Let's look at what happens to these markets, okay? So look at the crypto market. We could see. Now, we bought XRP, we in Stock Up U, we bought XRP at 302 and it's back up to 310. Okay. I made a list of the cryptos that I was buying, and it seems like they are all up. Yep. And we bought some SUI. It was down about almost 5%. XLM, we were like 4.79. We bought some Link. Now they're starting to go back up. So we bought these on the dip, just like I said I was going to be doing in money moves, and we are up in those positions. Two things. I'm going to play a clip of him talking about the strong labor market, but what could happen, and then we're going to go from there.
Consumer spending had been very, very strong for the last couple of years, and had repeatedly, forecasters, not just us, had been forecasting it would slow down, and now maybe it finally has. So I would say, if you talk to credit card companies, for example, they will tell you that the consumer's in solid shape and that spending is at a healthy level. It's not growing rapidly, but it's at a healthy level, and delinquencies are not a problem. You mentioned high-end delinquencies. I don't know what to make of that. I read the same thing, but so generally, if you look at the banks, and when the banks talk about in their earnings calls, the performance of credit has been good. So essentially, you have a consumer that's in good shape and is spending, not at a rapid rate, but it's true, and it was again right in line with what we expected. The GDP data that we got this week. And I think it's still a little bit difficult to interpret because you have these massive swings in net exports, which may also be affecting, some of that can be can affect consumer spending as well. Look, it's one of the data points that we pay most careful attention to, and there's no question that it's slowed, and we're watching it closely, but we also watch the labor market and the performance of inflation. Those are our two variables that we're assigned to maximize.
So now let's listen to the next point that I wanted to make. These are the key takeaways from the FOMC meeting.
The June CPI report showed evidence of tariff-induced goods inflation. Now, the tariff landscape is only starting to be settled with some of these more recent deals. Given the lags between when tariffs are announced and when they show up in goods prices, is 2 months a long enough horizon to evaluate the impact and be confident that tariffs aren't impacting the broader inflation process?
I think you have to think of this as still quite early days. And so I think what we're seeing now is substantial amounts of tariff revenue being collected on the order of $30 billion a month, which is substantially higher than before. And the evidence seems to be mostly not paid only to a small extent through exporters lowering their price. And companies or retailers, sort of people who are upstream, institutions that are upstream from the consumer, are paying most of this for now. Consumers it's starting to show up in consumer prices, as you know, in the June report. We expect to see more of that. And we know from surveys that companies feel that they have every intention of putting this through to the consumer, but the truth is they may not be able to in many cases. So I think we're just going to have to watch and learn empirically how much of this and over what period of time. I think we've learned that the process will probably be slower than expected at the beginning, but we never expected it to be fast. We think we have a long way to go to really understand exactly how it will be.
So he thinks the effect of tariffs will be slow, but he still thinks that they're coming. So that's why he decided to hold. Now, oddly enough, we have PCE coming, I believe tomorrow. And then Friday, we have new jobs data. So we had all of this information that came out. GDP came out good this morning, right? And then we got big tech still reporting even now. So all of these things are going on at the same time. Man, it just seems like he would have been better off postponing this meeting, forgetting about the schedule, and just going to next week. Let all of this data hit. Let PCE hit. Let the jobs numbers hit. He saw GDP come in good. It just seems like it would have been better had he postponed this one more week. What do you think about that? All right, let's go to his the last point that he made. I believe that is really sums up his whole speech.
Can you give us a little more about what kind of economic data does the Fed need to see before you'll be ready to cut? I mean, do you need inflation back nearly to target? Are there other things in the pricing that you look for? Do you need to see weakening in the job market? What kind of things are you looking for?
If you saw that the risks to the two goals were moving into balance, if they were fully in balance, that would imply that you should move toward a more neutral stance of policy. This is the special situation we're in, which is we have two-sided risk to both of our goals. When we paused, inflation was above target and the labor market was pretty good. So that was a time when policy was restrictive when we paused. And to be restrictive is to be supporting a return to our inflation target, right? So as the two targets get back into balance, you would think you'd move in a way closer to neutral, and that the next steps that we take are likely to be in that direction. What will it take? It'll be the totality of the evidence. As I mentioned, there's quite a lot of data coming in, which before the next meeting. Will it be dispositive of that? It's really hard to say. We don't make those decisions right now, so we'll have to see.
So there you have it, good people. You heard it from the Fed himself. He's letting you know what he's prepared to do. But the Fed board is crumbling because a lot of the other board members are starting to say it's time to cut. Let me know what you think. Should the Fed have cut on this meeting? Personally, I believe he should have cut last meeting and this meeting. Okay. But let me know what you think. Here's the recap. Job reports are on Friday. The Fed held rates. PCE numbers are due out tomorrow. GDP came out today, gross domestic product, and it was good. And the president tweeted, and believe it or not, I agreed with him. The Fed should cut rates. Okay. Microsoft stock just popped 6% on earnings live. All right. Inflation is above his projection. Okay. He said that. Speech was very short, which means he's kind of dovish. Labor market is solid, but the downside risk to inflation still persists. So that is the rundown of the entire meeting. Now, good people, take a look at that. That's the VIX. That is where it was while the Fed was talking right up until close. You see that? Now I had a few more shares, and I just got in and I was running a test. I shared this with the money movers, and look at that, 90%. You could see here that the VIX started to spike a little bit. All it takes is a little bit to make a lot of money, 90%, and they were cheap. Okay, so that's the VXX. I showed you guys where I normally make money playing the Qs, right? All right, so it came all the way down and ricocheted back up. But here's where I would have made money. Boom. And I would have been out, right? I probably wouldn't have got back into this, but I have done that. I've traded live. And I traded live in money moves one time doing options, and we wrote it down, bottomed out while he was talking, and wrote it up. This has happened at least the last 10 Fed meetings, but trade at your own risk, right? And or you could have entered into this position and walked away with a quick 90% while the Fed was talking, all right? So at the close, we wound up here. Now that the market is over, bell rang, NASDAQ came green, 30 points. Look at that. S&P, we'll call that flat, and the Dow is down. So remember in closing that the market generally needs 24 to 48 hours to decipher all of the information that the Fed just dropped. They have to listen to the jawboning, meaning what he said, and listen to his policies. And so what the market will open at in the morning, I would not run with that. That's what my advice to you is, because it needs time to decipher this information. Two things, good people. One, I'm going to be with the guys, all right, on Stocks with Josh's page. So I'm going to be with the crew, Keenan Grace, Mo, and Stocks with Josh. We're going to be on Stocks with Josh's page, 6 o'clock p.m. Chicago time, 7 Eastern Standard Time, New York. And for those of you in LA, that's going to be 4 o'clock p.m. for you. Come and join and show me a little support. And then come join us in Money Moves. We made some more money today, right? We made more money today. Where my money movers at? All right. So we will see you later. Sorry if I'm a little skittish, but it is thundering outside. And we're going to have a cool down, guys. Please stay safe and cool. But it is thundering, and I'm going to shut this stuff down. I don't want to spend no big money. All right. All right. But I will be back this evening with Stocks with Josh. Make sure you check out the links below. All right. We'll see you later. Live, love, laugh, and learn.